Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today I'm going to be taking a quick look at XRP, going over the current Dragon Pattern as well as the Elliott Waves and such, showing how the pattern has been evolving. It's been quite interesting watching this particular rendition of this pattern unfold lately, and the Dragon Pattern is something that you will tend to see during bull markets quite often. So it's good to watch it, to follow it, to kind of get a feel for it so that you know what to look out for in the future as well. So let's not waste any more time and let's get into the charts. And if you like the work that I do here, a great way to support me is by joining the Patreon. It's only because of the generosity of my viewers and my Patreon members that I'm able to do what I do. So it's definitely something to consider if you'd like to support my work. Thank you so much. I really appreciate it. First off, jumping over and taking a look at the Bitcoin dominance, this is the weekly chart. We can see that going all the way back here to mid-June of 2022, that the Bitcoin dominance has been trading in this well-defined channel. Recently, the price broke through right here, which was the first time price had traded outside of this channel on the downside. We did push out just a little bit here, and with this candle here, even a little bit on this candle, but in regard to pushing down below the lower trend line, this is the first time it's occurred since 2022. Now, staying with the Bitcoin dominance chart, except jumping over to the daily chart instead so that we can zoom in and take a closer look, we can see that the dominance broke below the lower trend line right here on August 23rd of 2025 and has been trading at or below the lower trend line since that time. This bullish fair value gap that we see right here on the weekly chart, centered at about the 59.98% range, was acting as support at one time, but once the price broke through this, has now been acting as resistance, turning this bullish fair value gap into what is known as an inversion fair value gap. Since it's bullish, it should act as support. But now that price has broken through it, it is acting as resistance, which basically inverted its role, thus the name inversion fair value gap. But you can see that price has not had any luck breaking back above this lower trend line since falling below it, and has not formed a single full body candle above it since that time. There's a very good chance that we could see a rejection off of this inversion fair value gap at some point, and it is also forming a bearish divergence right here with the price moving upward, and down here on the indicator with the price moving downward, and also being in the top range of the CCI. Now, we've all been wondering when altcoin season was going to begin, as this has been a very strange season and hasn't been anything like the cycles that we have seen previously. And as I've talked about, I do believe that what we're going to see is a 4-tier cycle moving forward rather than the standard 3-tier cycle that we've been accustomed to, with money moving into Bitcoin, Bitcoin going on a run, then coming from Bitcoin into Ethereum, Ethereum going on a nice run, then money coming out of Ethereum and moving into XRP, and XRP going on a heck of a run. But what we've seen recently is the BNB token actually surpassed XRP in the top 100 list, which is a very interesting turn of events in which very few people likely expected to see happen. But in order to see an altcoin season, we're going to need to see the Bitcoin dominance break down. So this will be very important to watch this level. And if we do break up above this upper trend line and get up above this inversion fair value gap, it will again start acting as support. So if you're hoping for an altcoin season, you don't want to see this occur. And if price does break down to the downside, we have a bullish order block here on the weekly, centered at about 52.82%, right in that range, which would be a likely target for the first area of potential support to watch for. Now, if you haven't seen the previous videos that I've been doing in regard to this particular pattern that we're seeing on the XRP chart, which is on the daily chart, this particular pattern is called a Dragon Pattern, with the head being here, coming down to the front feet, with the hump right here, into the rear feet, moving into the tail. resembling essentially a dragon, with this being its back, this being its bottom side, moving up to the tail. And laid over top of this pattern, we also have an Elliott Wave Triangle pattern, with the wave A being here, B, C, D, and E, with the E wave termination lining up with the wave 4 termination of what is a larger 5-wave Elliott wave impulse to the upside, with the wave 1, 2, 3, and the wave 4 right here, and the wave 4 termination lining up with the E wave termination of the Elliott Wave Triangle. So far, this has played out exactly as you would expect, basically textbook. And this pattern is still valid, is still perfectly in play, as the invalidation point, which would be the wave 1 termination right here, which is basically the top of the wave 1, as you can see here. According to the Elliott Wave rules, we don't want to see the wave 4 termination come down below this, and if any additional price action moving forward into the wave 5 starts to break below this area, it would likely invalidate it. But the good thing about that is it gives us something to watch for. So with current price trading right here in this area currently, we essentially have a pattern right here that we are very centered in because we know exactly where we're sitting in that pattern. The wave 1 termination is resting below the pattern. At the very bottom of the pattern, we have a bullish fair value gap right here on the 4-hour chart, which has acted as prior resistance on 2 previous occasions, of which price took a draw on liquidity, then reversed and made a big move to the upside on both occasions. So as a trader, this makes it a lot easier because you essentially know the area to keep your eye on if you have to pull the ripcord in case the pattern fails. Now moving over and taking a look at the 4-hour chart, you can see that the price is actually exhibiting a potential bullish hidden divergence right here, coming from this bottom point here, which is the E wave termination and the primary wave 4 termination, coming to the area where the current price action is now trading, with price moving upward and the indicator moving downward. This could be an indication that we're about to see a reversal here soon, moving to the upside. In my earlier videos, I hypothesized that this was the primary wave 4 termination point, but after seeing the price action, it's apparent that this is actually the termination point here, because I talked about this potentially being the wave 1 right here moving into this primary 5th wave in yellow. But as we can see now, with the price action, especially how it's been developing, this right here moving up to this would be your wave 1. So the wave 1, we have a 5-wave move to the upside. Right now, we're seeing an ABC correction for the wave 2 to the downside, both of which are subwaves of this larger primary 5th wave that we see right here. And we can tell by looking at the price action now that we're right in that zone basically, because generally the wave 2 will pull back in the area of the 618 Fibonacci, even down to 0.764 or the 786. Price came down, bounced off of the area of the 618, came back up, was rejected by this bearish fair value gap, pushed to the downside even further, and has now been trading right exactly in that area. The wave 2 can come down lower, going as deep as 99% retracement of the wave 1. But as it sits right now, price is trading nicely right in the fib area, exactly where I've been expecting it to be. Now I've already started to build a position here, planning to trade the subwave 3 to the upside. I chose to ladder my limit buy orders in this area that you can see marked out right here, and the first order has already been filled. I have a couple different ways that I do this, but one strategy, and the strategy that I'm using here, is I will place 25% of the available money for the trade on the first limit buy order, 25% on the second order, then I will put 50% on the third order. Now what that does is, let's say price comes down here, fills this order as it has for me now, and breaks to the upside, well, you're in the trade already. But if price moves down lower, fills this second order, since these are of equal size, it splits the average buy right in the center of the two of them. So it would bring my average down to right in this area here. Now, if price continues to move down even further and triggers the third order, this third order is equal to the sum of both of the first limit buy orders. So now that the average has been split right here, if it does hit the third limit buy order, it then splits it in half once again. So essentially, it would bring my average buy to right in this area here, bringing my average down as these are filled, giving me a better price and increasing my position. And of course, in this situation, if price continues to move to the downside, I know the area that I'm looking for as far as this pattern being disqualified, which is the wave 1 termination. So I can simply just set my stop loss down in this area here. So if price just continues down, it'll hit my stop, which will preserve my capital and limit my overall risk. And one thing I would always implore all of you to do is always use a stop loss. I'm not going to say any names, but there is a great trader that I follow on X, incredibly successful, makes incredible predictions, but the current trade that he's in now, which is shorting Bitcoin, he did not use a stop loss because he was so confident in Bitcoin dropping that he built a massive position. And the last post that he put on X showed that he was down over $1 million. And when price was moving up to set the new all-time high that we've just recently seen in the last few days, he was likely down many, many millions of dollars. I don't know the exact amount, but the loss must be staggering. Now at this point, since he's not been posting, I don't know if he was liquidated. I don't know where he's sitting in the trade. He still could be in the trade. So there is still a chance that he could recover his losses as long as he hasn't been liquidated or closed his position. But had he simply used a stop loss, he could have avoided this entire situation because he would have just got stopped out, sat back patiently, watched the price rise. Then he potentially could have put his shorts back on somewhere near the all-time high and would already be in the profit. But since he did not place that stop loss, his losses just compounded and compounded and compounded. I cannot imagine what it would be like to be down millions of dollars. That's just crazy. So I'm not trying to put this person down, but just using it as an example. Always use a stop loss. Protect your capital and reduce your risk. Now jumping over and taking a look at the XRP exchange liquidation map, this is the 30-day, we can see that there is quite a bit of short liquidation leverage resting above the current price. On this chart, we can see it moving as high as about that $3.30 level, with a much smaller amount of long liquidation leverage resting below current price, moving down into the 250s and 260s, with the largest concentration basically sitting above about that $2.63 range. So there is a lot of liquidity that is stacked up above the current price, which could be a good sign that we're about to see some prices at least move up and start to capture some of that buy-side liquidity resting up above current price. Now jumping over to take a look at the liquidation heat map. This is the 1 month. And we can see here looking at this that XRP actually cleared out a very thick band of liquidity resting in this area here, has taken out a few other smaller bands here and here, with a band resting right in this area at about that 275 level, as well as a band resting right in this area, which is right in the mid to upper 60s range, resting below this previous low right here, and just above this liquidation candle low we can see right here. Looking above the current price is where we start to see all that liquidity piling up that we just saw in the previous chart. So we have a thick band of liquidity resting here at about that $3.11 range, another thick band resting here at about $3.15.5, and another one resting here at about that $3.20.25 range. But all in all, it's pretty tightly packed in this area right here, just above these previous highs. So if you were a market maker and you were looking to acquire liquidity, and looking at this chart, where would you take the price? Because it seems like to me that it's very likely, looking at this chart, where the next area price is likely to move is going to be. I think it's going to be up in this area, which is exactly why I've started to build a long position, because there's so many things working in favor of this particular premise right now. That doesn't necessarily mean that I'm going to be correct, but we have the Elliott Wave Triangle that still has the primary fifth wave remaining. We are currently getting ready to start the subwave 3 of that primary fifth, which tends to be the biggest move within the wave that you'll see. The lower price is supported by a bullish fair value gap as well as a clear line where the wave 1 termination resides, which gives us a clear potential invalidation point. We also have a large amount of liquidity resting above the current price. That certainly doesn't mean that price is going to move up. You never know what's going to happen. There could be a black swan tomorrow for all we know. But as it sits right now, I think a person can make a very strong case that it's very likely that we're going to see price appreciate here at some point. Of course, that's not financial advice, and as always, just my opinion. And if you're looking for a place to leverage trade, or if you're just looking for a place to swap your cryptos for zero fees, you definitely want to check out Bitunix. Bitunix is the only place that I trade, and it's where I swap all of my crypto. So you definitely want to check it out. You'll be glad you did. So thank you so much for watching. I appreciate each and every single one of you. Do me a favor and hit the like button. I'd really appreciate it. Good luck and have a great day.